Hi everybody, and welcome to the Merida English Library lecture series. Normally we do this at the library every Wednesday night, but this year due to COVID we're doing it online. So look for a new lecture online every Wednesday. And if you want to donate to support the lecture series, I know some people do that in the library, it would be very much appreciated here. There'll be a link in the description below on how to make a donation. So normally the lecture series talks about great topics like history and culture and things that are relevant to Mexico, relevant to our membership. Hopefully this lecture today is relevant to our membership, but we're going to be talking about taxes. Specifically, a new digital tax law that got implemented in Mexico on the 1st of June this year, 2020. This new tax law changes the way the government collects taxes from transactions that are occurring online on digital platforms digital platforms like Airbnb or Uber or Rappi, Mercado Libre, Amazon, places like that. Companies that maybe are headquartered outside of Mexico, maybe have a Mexican presence, but ones where there's a lot of money trading online from individual users of the platforms, either the drivers in Uber or the guests on Airbnb and places like that. And so this new law really changes the way the government is attempting to collect taxes on those kinds of transactions. It affects us today because it affects Airbnb, vacation rental, VRBO, places like that. People that rent their homes out on vacation rental platforms in Mexico. Maybe they're foreigners, maybe they live here, but this law changes the way in which that's going to be happening. And so that's really the driver for this lecture today, to share some information about what's happening and sort of how to comply with this new law. I am not an accountant, and so the tax advice I give today is not really advice. It's total disclaimer. It's not official professional advice and shouldn't be treated as such. If you want to speak to an accountant, and I really highly suggest you do, find a tax accountant with information that's really specific to your specific situation. It is really important that you do that. This law is a significant change and one where you will need some serious expertise in order to make sure you do things right. Failure to comply is going to be tricky in this situation. So, I'm not an accountant, so why am I here? I'm actually a property manager. I run a company called Remixto. We've been in business for now about 8 years, operating vacation homes on behalf of owners and things like that in Merida and also in Mexico City. And so that gives me a lot of insight into the vacation rental industry and how this new law is shaking out for owners such as yourselves maybe, or people like that. So that's why I'm here. And hopefully I have some interesting and helpful information to share. So today we're going to be covering a number of topics. Let's look at the agenda. Okay, so we're going to be starting today by talking about the digital platform tax law, what it is, how it works, who it affects, that kind of thing. We're going to move on, and then we're going to be talking about how to actually comply with this new law. It's a big law and there's a lot to do. So I'm glad we're doing this via a video so you can pause, go back and review the notes again. So there's a lot to cover there. We're also going to be talking about how to receive payment. If you have a listing like on Airbnb or something like that right now, you probably get paid out to a bank account in your home country like the United States or Canada when each reservation begins. Is that going to continue? Is that the best thing to do? Should you change your ways of doing payouts? We're going to be talking and covering some interesting points there. Next, we're going to be looking at how to affect your taxes online on the platforms themselves. The platforms have great tools for how to implement taxes that you might want to charge to guests and things like that. So we're going to be taking a quick look on how to do that. We're also going to look at how to download various tax documents that the platforms are going to be producing on a monthly basis that are going to help you comply with the Mexican government and the new tax law. We're also going to be looking at some solutions. There's a lot to do in this law. And so, maybe you want some help. Maybe you need help doing this or to figure out the best way for you personally to comply with this new law. So we're going to be looking at some solutions. And then lastly, we'll have some resources to various websites and things like that so you can get more information and, decide what your next steps are. So let's begin. The digital platform tax law. As I said, this was introduced on June 1st of this year, And it applies to digital platforms online, such as Amazon, Rappi, Uber, and specifically for our purposes today, Airbnb, VRBO, and other vacation rental platforms. The law really requires two things. It requires people that are earning money on the platform, the Uber drivers, the Rappi delivery people, people like that, and obviously the Airbnb hosts, to register a Mexican taxpayer ID with the digital platform. In Mexico, that Mexican taxpayer ID is called an RFC. You get issued an RFC by the Mexican Tax Authority, that would be SAT, S-A-T. And so SAT will issue you an RFC, and then you will go ahead and register that RFC with the platform. And what that does is it really ties a registered taxpayer with the income that's being generated on the platform, so that the platform knows what income is being earned and what taxpayer is doing the earning. The law has a fourth component, and that requires that the digital platform share that information about who's earning what with the Mexican government, and specifically again with SAT, so that SAT knows what income is being earned on the digital platform, what taxpayer is doing that earning and who the income is attributable to, and therefore what taxes are owed. And that really is this new digital platform tax law. The way it's being implemented is via a series of tax withholdings that are being managed by the platforms themselves. What is a tax withholding? It's pretty straightforward. It's where someone, in this case the platform, is going to take a portion of your payout that you receive for a reservation and then hold it back. And that amount that they don't pay you is going to be considered a withholding. It's going to be basically an installment on the taxes you owe. The government and everyone knows that obviously you're going to pay some taxes, so they're going to withhold a portion of it as basically an installment on the taxes you owe. At the end of the year, or actually in the case monthly as it is in Mexico, when you file, you're going to be able to figure out what actually you earned, therefore what taxes you actually owe. You're going to figure out what withholding you actually paid or was deducted from the revenue that you earned, and therefore what the difference is, whether you owe more or whether you're going to receive maybe a refund. Probably a credit, but you definitely see your tax advisor on that. So what are the taxes that are relevant here? Well, there are basically three types of taxes that the digital platforms get involved with. There is sales tax. In Mexico, we call that IVA or AVA. There is income tax. In Mexico, that's called ISR or ISR. And lastly, there is a lodging tax. The lodging tax is really a hospitality tax. It's a different percentage depending on the state, and it's equivalent to like the hotel tax that you would pay if you stay in a hotel. It goes to the local government for services that tourists are consuming in the local area. This tax, this last tax, has been a tax that the platforms have already been collecting for a number of years. And so this new digital platform tax law doesn't really affect that. It affects the first two. And so from starting on June 1st, and actually later in the case of Airbnb didn't start deducting these withholdings until October 1st. But anyway, the idea is that the platforms are now doing a tax withholding or reserving a portion of your payout for both things, both IVA and also ISR or income tax. Why is this happening? I think it's a really important question to ask ourselves at this point in time. Essentially, people that are renting out their homes, whether it's on Airbnb or long-term renting locally within the community, have always had a tax obligation. They've always needed to pay income tax and various other taxes on the activities that they're performing, the rental activities they're performing and the rental income they're receiving. So essentially, this new law doesn't actually change your tax obligation. What it does change is how it's collected. Historically, the government has not been very effective about collecting these kinds of taxes. And so this law really clarifies how the taxes are collected, gives a very clear and precise way to report to the government kind of what activity is occurring and what taxes are due, and really cleans up a lot of that ambiguity or maybe confusion on the part of individual hosts who either don't know how to comply or aren't complying or for whatever reason aren't paying taxes in Mexico. I know most of you are probably filing your taxes in your home country in the United States or Canada or wherever you live, and that's great. and there are reciprocal tax agreements between the two countries, and maybe you need sort of cross-border tax accountants and things like that to handle the complexities of this. Well, all that's gone. Now it's very, very simple. The government has stated you have to register with the Mexican Tax Authority, you have to get an RFC, you have to put that on the platform, and the whole process is probably more work, but certainly more clear. And so that's really why this is happening, because the government is trying to work hard to collect more of the taxes that are actually owed, and maybe trying to make the process more clear along the way. But again, I'm not an accountant, so that's just my personal opinion, but it certainly makes a lot of sense. When you register your RFC with the platforms, Airbnb, vacation rentals, that kind of thing, once you register your RFC, the platform is going to withhold a certain percentage of your earnings on a monthly basis. They're actually withholding on each individual payout. That's certainly what I've seen in my experience on the platform. And the amount they withhold depends on how much you earn, at least in the case of income tax. So we can see here on the chart, monthly, if you earn up to 5,000 pesos per month, the withholding will be 2% on the platforms for income tax. If you earn more than that, let's say 15K, 3%, and it scales up. If you earn more than 35,000 monthly in pesos, you will have a withholding of 10%. So that's for income tax. On the EVA side, the government will also be withholding an additional 8% for EVA. EVA is 16% in Mexico, but the government will withhold 8% because they know that you will have some expenses that also incur EVA, and EVA earned minus EVA spent on expenses. There's a whole tax calculation around that. But in any case, the government is withholding 8%. For EVA. Now, all of this is predicated on the idea that you have entered your RFC into the platform, and also that you are an individual. This law is a little bit different for corporations, but I'm guessing most of you here looking at this lecture today aren't corporations, and we really are talking about individuals. So if you are an individual and you have got your RFC on the platform, this is the withholding that will occur. A really important question is when all this started. I know I said the law took effect on June 1st, but when did the platforms actually implement it? In I think July, around July, Booking.com implemented it in I think about August. HomeAway and VRBO, that platform, started implementing it, and Airbnb started implementing it on October 1st. Each platform has applied it slightly differently, and so your mileage on each platform will vary. But basically it is the idea that all new reservations taken on or after either June 1 or the date it was implemented on the platform are eligible for this tax withholding. Now, that's a big variation, because if Airbnb did it October 1st and the rule actually started June 1, what does that mean for reservations between June 1 and October 1st? I wish I knew. I've been trying to work this out with Airbnb. Their customer support hasn't been very friendly on this issue, and I haven't actually managed to get a straight answer on them. I've got answers, but I've had about 3 or 4 of them, and they've all been sort of largely in conflict with each other. So I'm not sure what it means between June 1st and the date of implementation on each platform. But at the end of the day, maybe we just have to live with that ambiguity a little bit. I know when Mexico rolls out new laws, oftentimes we spend the first few months sort of learning how they're shaking out and what it means and how it's going to be implemented. And I think we're just in that transition phase. But, at the end of the day, I know exactly on October 1st and onwards, there is withholding on all of the reservations. And, really moving forward, that's the thing we need to focus on. Before we move on to how to comply with this law, I want to make it crystal clear who must comply with the law. The law is very, very clear. There are a number of conditions. If you meet one of them, then you must comply with the law. The condition that you're probably going to be meeting is that the business operation happens inside of Mexico. What this means is that your property's inside of Mexico, the rental operation is happening inside of Mexico, the guests are staying in your house inside of Mexico, and so therefore this rule applies to you. Some people ask, what if I'm not renting on a digital platform? Does the law still apply to you? Well, yes and no. I mean, you aren't on the digital platform, so the digital platform isn't going to do withholding on income that maybe you earn when you rent your home to a neighbor and your neighbor pays you in cash, that kind of thing. There won't be withholding on the digital platform, but I should be clear, you are still responsible for declaring that income, reporting it to SAT, the Mexican Tax Authority, and paying taxes on that. So, the compliance is going to be different, but you are definitely still obligated to pay tax on that income. So now we get to the real meat of it. How do we comply? And what I'm going to be talking about here is how to comply as an individual. If you are a corporation, this law really isn't for you. If you're a corporation or a business operating in Mexico, you already have the obligation to report your income, file your taxes, pay any amount that's due, whatever. You still have all of those obligations. And so this new digital platform tax doesn't really apply to corporations, in that if you are registered as a corporation or a business on Airbnb or the other platforms for that matter, won't actually be doing any withholding. So the next part of this video is really going to talk about the withholdings as they apply to individuals. And I'm going to be focused probably fairly specifically on individuals that aren't Mexican nationals, ones that are potentially living outside of Mexico, and sort of how this affects them. So let's get into it. If you are renting on a digital platform, the law says that you must give the platform an RFC. This means you need to have an RFC. How do you get an RFC? Well, if you don't have one already, you need to go along to your local SAT office in Mexico and make an appointment to receive an RFC. During that appointment, you will give them all of your details. You will give them information about the types of income you are receiving and the types of economic activity you are engaging in. It will be obviously for your vacation home, but it might be for anything you do within Mexico. SAT will ask you all about that. They will give you an RFC, and they'll give you sort of a digital signature that they do here in Mexico. Once you have that, you can return to the platform and register that RFC in the platform. Okay, step 2, generating income facturas. Firstly, what's a factura? A factura is an electronic receipt. It's like an invoice, but in Mexico, it's extra special. They have electronic invoices that get registered with the government and are nice and official. It's really, really important that you get facturas for things that you buy and income you earn. We're going to be talking about income facturas. You're probably more familiar with expense facturas. You go to the store, the person ringing you up says nota or factura, and you say, oh, nota, and you get a paper receipt. Well, if you said factura, you would get an electronic receipt. And that electronic receipt or invoice could be used to claim a deduction against your taxes in Mexico. And so that's what people do. That's what individuals do here on deductions that they're allowed to claim, and also certainly what businesses do to show the expenses they're incurring so they can deduct them off the income and so that they can pay income tax on the resulting profit. And so when you get an expense factura, the company selling you the good is actually issuing you the factura. So for them, the factura is an income factura. Now, because you're the host and you're renting on Airbnb, you're generating income, so you're acting as the store, and you need to issue an income factura. You don't have to issue an income factura just because the guest asks. You have to issue an income factura for every single reservation, irrespective of whether the guest asks you for a factura. The guest, once you've generated it, it goes out there into the cloud, and the guest can go out and independently download that factura and use it as an expense on their side for whatever business purpose or whatever they have for it. So, but the takeaway here is you need to learn how to generate an income factura for each and every reservation you take. There are sites that you can go to online. There'll be some links in the resources at the end of the lecture where it'll talk about how you go and generate those. You can generate it directly on the SAT website, or you can use a third party. There are a lot of sort of for-profit companies that have sprung up to help you generate income facturas. Right, step 3, expense facturas. You need to collect them. Por favor. What is an expense factura? Well, when you go to the store and you buy something, you can ask for a factura in return. You need to register your RFC with the store or with maybe the electricity company, CFE, or whoever you pay electricity with Telcel or Telmex or whoever your internet service provider is. is register your RFC every time you make a purchase. Once it's registered, you can continue to make purchases. You don't have to register it every time, but make sure you register at the start. Make sure you collect all of your electronic facturas, and there will be some resources at the end of this on how to do that and how to obtain them from online sources. But anyway, make sure you do it. Why is this important? Why do you need to get these official electronic facturas on you to show your expenses? Well, your expenses need to be deductible. And now we're talking about income tax. Income tax in Mexico is tax on profits. For example, you take $10,000 in income in a given month and you have expenses in the range of $5,000, for instance, then your profit is 5,000 pesos, the remaining 5,000 pesos after your expenses. Your income tax is due on that profit, on that 5,000. And income tax in Mexico is around 30%, more or less, and so you will have to pay 30% income tax on the 5,000 profit you have. Now, imagine a situation where you didn't collect any expense receipts, any expense facturas, and so you had nothing to deduct off of your income. Now your income would be 10,000, your profit would be 10,000 because you've got no declared expenses, and now you're paying a tax, an income tax, on your profit of 10,000 pesos. Nobody wants to do that, and so we really need to make sure that we show all of our expenses and get facturas to show that so that we can deduct them off our income to lower our reported profit. So that's step 3 and why that's so critical. It is really important that you make sure that you deduct the right expenses. There is a list of things that are deductible. If you try to claim a deductible that isn't actually deductible in the line of business, the vacation rental industry that you're engaging in, the SAT authority doesn't take too kindly to that. So you have to be accurate in your deductions. The list is large, but still there may be some things that you think maybe are deductible and actually are not deductible. When you report to the government something that's not deductible and that you're claiming is deductible, SAT can take a sort of a very dim view on that. So it's very important that your deductibles are complete and also correct. And so again, tax professional, please. You must use a tax professional if you don't understand how to do this very well yourself. Step 4, filing your tax returns. I talk to friends that I have in the United States and they talk about filing their taxes once a year and how much of a big deal it is for them, and I laugh. In Mexico, we file taxes monthly. In this line of business that you will be engaging in, vacation rental industry in Mexico, you have an obligation to file a monthly tax return as well as an annual tax return. So it is very important that you stay on top of collecting your income facturas, collecting your expense facturas, writing everything down, working out what's deductible and what's not, submitting it to your accountant, and getting your monthly filings done. If you are late on a filing or inaccurate on a filing, you can be penalized. And so the penalty is money, and so you don't want that to happen. So make sure that you're on top of your monthly filings. Okay, so if you've done everything right up until this point, step 5 should be pretty straightforward. You have to pay your taxes. So on your annual return, you will figure out with the government what has been withheld, what income taxes and taxes are owed, and you'll be able to square up and see who owes who. If you have to pay, you'll pay, and if you are due a refund, I don't know, maybe you'll get a refund, or maybe they will give you a credit on the taxes you owe in the subsequent years. I'm not an accountant, but my experience with the Mexican tax authorities is that they're not too forthcoming with refunds, let's put it that way. So, talk about your tax accountant with that and see how that's going to shake out for your individual situation. And then lastly, after you've paid your taxes in Mexico, step 6, what impact does this have on the taxes you pay in your home country? Well, if you're paying all your taxes in Mexico, do you have to pay double taxes where you live in the United States or Canada or wherever you live? Well, probably not. There are reciprocal tax agreements between nations. Canada and the United States have one with Mexico. And so if you are paying your taxes here in Mexico, you can use that tax payment to offset against any tax payment that may be due in the United States or Canada. Again, talk to your tax accountant in that country and they'll know how to sort all that out for you. Okay, so that in a nutshell is how to comply with the new digital platform tax law in Mexico. And if you're not already worn out, let's move on to getting paid. Everyone wants to get paid. Maybe this will be a nicer thing to talk about. So right now, if you are on a platform, you're probably registered on the platform, and when you take a reservation, when the reservation begins, you get a payout from the platform. It's probably in your home currency of where you live and probably to a bank account in that home country. Does any of that change as a result of the new law? Well, we have to think about it from the platform's perspective. If you are now registering your RFC, you're telling the platform that you are a Mexican taxpayer. And that's great. There'll be withholding, everything will be fine. And so that's good. Now, however, you're still receiving your money paid out to, let's say, for example, a US bank account. I'm using this example because it's an example I faced. I've been playing around on the platforms trying to set this up for my business and for the interests of my clients over the last 30 days. And so, I've seen some interesting things. In one case, I saw where the person, we registered them as a Mexican taxpayer, and then their payout was still the United States. And when Airbnb sent them the payout to the United States, as well as they actually did a 30% US withholding deduction. And if you think about it that from the platform's perspective, the platform is saying, well, this is a Mexican taxpayer, therefore this is a Mexican, and we are taking money from Mexico and moving it to the United States. Well, the US has tax withholding laws as well. And so in this case, the Airbnb withheld a 30% tax deduction on behalf of the US. And so, although this wasn't a Mexican tax withholding according to this new law, suddenly the situation was the client was running afoul of the US tax law. And so nobody wants to be in that situation. And so your mileage will probably vary. I know Airbnb has tweaked their rules and the way they pay out over the last couple of weeks as the law's been coming into implementation. I've seen some changes in the rules. I don't really have a lot of good information because every time I talk to Airbnb and ask them to explain me the rules, they say, oh, whatever. So I don't know exactly, but I noticed there are some changes. So it'll probably continue to evolve in the coming months, and your mileage will vary. Your individual situation will be yours. But just as you go into the platform and start to configure your tax ID, just look out at your payments and see what is being withheld and why. You certainly wouldn't want you to run afoul of having a 30% tax withholding to getting paid in your own home country. It may be the case that to get around this issue, you may have to open up a bank account in Mexico. I mean, this law, if you think about it, really applies in Mexico. The government is thinking about Mexicans engaging in this rental activity. Mexicans probably live in Mexico. Mexicans probably get paid in pesos. Mexicans probably have bank accounts in Mexico. All of this seems reasonable. And so maybe the best result for you is to open a bank account in Mexico. You'll probably be able to do this now that you have an RFC. You'll probably be able to get a bank account and get paid pesos into that bank account for the reservation or rental income you're earning. And from there, you'll be able to pay tax on that and then do what you want with the remaining profit. So how do we manage all of this new tax stuff on the platforms themselves? There is a couple of things that the platforms are doing for us, and we need to think about what taxes are needing to be configured on the platforms. And remember, there are three basic taxes that are applying here. There is income tax, there is sales tax, and lodging tax. Well, let's ignore lodging tax because that's always been there on the platforms, at least for the last few years. Nothing's changing about that, so let's put that aside. That's already being charged automatically to each and every guest that books a vacation stay. You can now go in and add EVA or the sales tax to each stay so that the guest is automatically also charged the sales tax. Airbnb tells us that they're automatically doing that for all listings in Mexico. I haven't actually found that to be true. I've done some searches on Airbnb on listings in Merida over the last few weeks. Some have the EVA added on as a tax on each stay and some don't. it's been hit and miss. I've also noticed that some of my listings that have not had EVA applied to them, I come in the next day and they now have EVA added automatically to the reservation. It's been configured for me by Airbnb. So it seems Airbnb is sort of getting to it slowly. I can't tell you what the other platforms are doing. I've done most of my analysis on Airbnb, as that is the major player. But the mileage will vary, and I think this is just, again, something that's going to shake out over the next couple of months. So you can go in, this is the section here, where you can add the EVA if it's not already automatically applied by Airbnb. Check it out. If it's not, maybe you want to automatically add the EVA to your reservation so that the guest pays that additional 16% that's being withheld from you. Lastly, income tax. There's probably not a lot you can do on the platform about income tax. Income tax is kind of your responsibility based on your particular profit and based on your particular circumstance. So there's not much you're going to do about that on the platform itself, except maybe increase your rates. Maybe now that you have a tax obligation, you're paying taxes, you need to increase your price on Airbnb, or you feel like you need to increase your price on Airbnb to cover it. That's up to you. Are people doing it? I don't know. I haven't seen much evidence of it. In the month of October, since this is really rolled out on the Airbnb platform, I haven't really seen people increasing their prices. Maybe they're still trying to figure it out. Maybe they're electing not to. Maybe because the industry is sort of in decline because of COVID and everything, people are really hesitant to increase their prices. Maybe they will, later on as we get into next year. I don't know. But what I do know is that right now I'm not seeing a lot of evidence of price increase. So it doesn't mean you should, but be aware that, you're possibly not necessarily as competitive with a higher price. Lastly, what you can do on the platforms is go in and download your monthly tax information. It's really important for your monthly filing to know what was withheld from your payouts. The platforms are obliged to give you a monthly statement of that, and you will be able to download that withholding information and supply that with your monthly tax filing. So that's basically it. That's how the new law works, how you comply, how you do your payouts, basically how everything works. Maybe you're thinking, wow, that sounds like a lot. I don't know, is it worth it? Do I have to? What happens if I do nothing? Well, the government's got a plan for that. If you decide to do nothing, there are some rules in place to handle that case too. Now, bear in mind, you do have a legal obligation to comply. But if you choose not to comply, the government and the platforms are set up to start withholdings anyway. And there is sort of a default withholding that the platform is going to make if you don't comply, if you don't submit your RFC, and if you don't start doing all of the compliance steps that we've previously talked about. So if you don't enter the RFC, the platform will withhold 20% of your payout for income tax, ISR, and 16% of your payout for EVA. There is no negotiation on this. If you enter a US tax ID, if you enter no tax ID, whatever you do, so long as it's not an RFC issued by the Mexican government, that will be the default withholding, no ifs, ands, or buts. And so if you think about that as 20% for income, another 6%, another 16% for EVA, that's 36%. If you add another 5% for lodging tax, the lodging taxes tend to range between 3 and 5% depending on what state you're living in. But that's like 40% tax lost already for not complying. Are you still profitable if you're going to lose that kind of money right off the bat in withholdings? I don't know. You'll have to figure that out for yourself. But that amount is high, and so maybe you are better off complying. I don't know. Maybe you're better off not doing vacation rentals at all. I don't know. I mean, your mileage varies. But if you do nothing, that is the withholding that the government will take, and the platforms will take on the government's behalf. Who can help in this situation? What are the solutions? There is a burden here. What do I actually suggest you do? I mean, obviously comply, but who's there to help you? Well, there are a number of providers popping up that are offering a number of solutions to help people maybe in your situation that need some assistance in complying with the law. There are people that are tax experts and accounting firms and things like that are offering services that enable you to start a business in Mexico and have them help you register that business in Mexico. By doing so, and by being a business, You will obviously have a very different tax obligation in Mexico, one that the accountant will obviously be helping you with. But the joy of doing that is that because you are registered now as a business, your RFC will be a business RFC, and when you register that with Airbnb on the platform, there will be no withholdings. You'll have a much different and probably more onerous compliance burden, operating a business. But that is an option if you want to start a business. I mean, renting vacation rental property in Mexico is kind of a business. You are doing sales, marketing, accounting, customer service. It's a business enterprise. Maybe you want to consider opening a business to handle all of this for you and getting a tax accountant. And so I got a couple of links, I think, in the resources at the end of the document to help you with that. So that's an option. You can start a business. If you hold your property as a fideicomiso, this might be an option for you. But if you've bought your property in Mexico and it's within one of the zones where you can't buy outright, maybe you've already bought the property as part of a business. If it is, you're probably already running a business. And if you are already running a business, this is probably a road you want to go down. Start reporting all of your rental income through that business and, upping all the work you do on the tax side to compensate. Maybe your property manager can help. You probably, especially if you're living remotely outside of Mexico most of the time, have a local property manager that handles that. It all depends on who your property manager is and what they are willing to do and what they're able to do. If you have a local property manager that maybe is a friend or a neighbor or sort of an individual and they're Mexican, they'll obviously have an RFC already, and you want to maybe talk to them about taking on the burden of the income on your rental property using their RFC. In this situation, they would type their RFC into your vacation rental listing, and by doing so, they would be declaring that they are the recipient of all of that money. The money would have to then be paid out to them most probably to square it all out, and they would have the tax burden on that. Maybe they're good at collecting facturas and doing whatever else to reduce that burden, but that's really up to them. Do they want to take on that burden? Are you comfortable with that? That's definitely a conversation you should have with them. But if they are an individual, they are still subject to all of this withholding in the same way that you would be when you sign up and get your RFC. So, bear that in mind. If your property manager is a company or operating as a company, they will have an RFC also. They'll be running as a business, and they probably have some solutions for you. Every company is different. Every company is grappling with this law, as I am for my clients in the month or two since it's come out, and the situation's evolved. So really talk to them and see what kind of solutions they offer. I know, speaking personally from my experience in my company, I have clients both in Mexico, the United States, and Canada, and largely because Remixto, my company, is a cross-border operation. We operate both in Mexico and in the United States. We've worked out all of those cross-border issues such that our clients are not impacted in any way by this new law. They can still receive all their payouts in full with zero withholding in the currency of their home country. So that's good for them. I'm happy. I'm excited that we managed to work all of that out for them. But again, the mileage of your property manager may vary because they may have a different setup than what I have, and they may not be operating across borders and doing all those other things to facilitate all of this new law. If maybe you don't necessarily want to open a new business, or let alone even really get an RFC as an individual, or maybe you're really happy with your local property manager, but they really can't help you with this because they're really not set up to handle this tax compliance that needs to happen here. And you don't really want to change your setup. What options remain if your property manager can't help you and you don't want to set up a business? Well, there is a third option. You can engage a specialist or a business just to handle the tax part of your operation and to handle your tax compliance. In this case, you would give over your vacation rental listing to them. I mean, you would still control it, you would still log in, respond to all of the guests and all of that, but essentially they would receive the income or a portion of the income and then handle the issuance of the income facturas, the expense facturas, all of that kind of thing on your behalf, and you would essentially be running your business through their business. There are solutions starting to pop up online for this. I know that for sure because one of the solutions is being created by me. We are actually starting up at Remixto a service which does exactly that, and I'm sure we won't be the only one because it's going to be really difficult for a lot of people that are from overseas. But the idea is, if you like your operation, you like your local property manager, but you need help with the tax compliance, you maybe need help with the bill payments, you maybe still want to receive the income in your home country to try and figure out how your tax withholding works, all that kind of thing. There is a service, our service, and probably other services evolving in the coming months that can help you with just that part of it. So that might be a good option for you. I know every time the government changes the law, there are businesses that spring up to help one comply, and I think this will be an evolving market. But here are some resources that you can check out to maybe get additional information and figure out what your next step is. And with that, we have reached the end. Thank you so much for joining us today while we covered this important topic. I know it wasn't the history and culture of Mexico like the library normally talks about during its lecture series, but I hope you found it informative. If you did, please feel free to donate to the library. There is a donate button in the link below. The library would very much appreciate your donation and support through COVID in this difficult time. And we hope that the lecture series will return to the library as soon as possible. And until then, please be safe. And I hope you found this useful today. Thank you so much for watching.